Kansas Department of Revenue. Just need to let you know by attending this will not flag you for an audit. So I will not turn anybody in. So what's said here stays here. I don't turn people in. If I did that, no one would ever come to my classes. With that said, if anyone's in an audit, I hope everything goes well. I'm going to do my best to give everybody good information. However, whatever I tell you is not binding to the Department of Revenue. Basically because we really don't know exactly what you're doing until we audit you. So which ought to really make you feel good. But there is something that is binding, something called a private letter ruling. You can write in for a private letter ruling. They're free. You would email that in. I thought I had a slide for that, and I guess I don't. The email I don't know if everybody downloaded the publication. It's the KS-1525. Looks like this. And the number, how you know it's in the lower left-hand corner, KS-1525. Sales and use tax for contractors, subcontractors, and repairmen. On or about page 26 or somewhere in there. I'm not sure what version you guys have. I'm updating this, so I maybe have pages off just a hair. But there's a section in there that talks about the policy information library, and then right under that talks about written rulings. And so it talks about private letter rulings. And so it gives you the email address where you would email in for a private letter ruling. So a private letter ruling is binding. So with that, you're first of all must be a business. So you must have a sales tax number and must be in business, and actually must be an actual scenario. So you can't write in for hypotheticals. So if you wrote in for a hypothetical, they just refer you to the booklet and let you look it up, and they just won't answer a hypothetical since it is binding. But they're only going to answer the question you ask. So because it is binding, so with a private letter ruling, you're going to want to have your question be as detailed as possible. So because in order to be binding, it needs to be actual and factual and accurate. A lot of times pictures help, especially with construction contractors, because we don't always know what it is you're talking about. So an actual picture that you take, not a hand-drawn picture, but a kind you take to show us what it is you're talking about, that helps a lot of times. This is what we're describing, and this is what we're talking about. And then takes sometimes 30 days or more, depending on how detailed this is, to get an answer. But then you'll get an answer. Yes, this is taxable, or no, it's not. And that's your get out of jail free card. If auditor were to say this is taxable and you got a private letter ruling that says no, this is exempt, okay, that's what it is. It's based on the information you provide. A lot of people just don't know that it is available to them. So this class is for construction contractors. So there's other definitions of contractors in the world, but for sales tax purposes, this is construction contractor. So the definition of a contractor for sales tax purposes is someone who takes tangible personal property and installs or applies it into real property. So tangible personal property defined basically as a physical item, something you can sense with your senses, see it, touch it, feel it. Real property is real estate, so permanently fixed buildings and land. So construction contractors, so plumbers, roofers, concrete, landscapers, that type of thing. So you're installing or applying tangible personal property into real property. The laws are different for sales tax purposes than they are for a regular retail business. Regular retail business buys what it is they're selling without tax, and they collect tax on the final cost, the gross sales. Now, I hope we're simplified that, of course, but that's ultimately what they're doing. In Kansas, the whole idea is to have sales tax paid one time by the final consumer, and that's ultimately what they'd like to do. So we'll see how that happens with contractors. The general rule of law in for sales tax, under the statute for sales tax is Kansas statutes annotated 793603. In layman's terms, says for the privilege of doing business in Kansas. Basically, you must register, collect, and remit sales tax. And what this means is the default in Kansas is when you sell it, it's taxable. So the default is it's taxable. The exception is exemption. So heaven forbid you're ever audited. The auditor's already coming out. Everything's taxable. The burden of proof that something is not taxable is on you. So you're going to need to show that everything I sold and everything I did, I collected tax or paid tax, or I have a good reason why I didn't. So that's how you're going to keep your books. So I made that sound easy, and it's not always easy. Construction contractors, sales tax is twice as hard as regular retail business. First of all, there's two parts to a contract. For a retail business, they just collect on the gross receipts, the final cost, the selling price. Contractor, there's two parts to a contract. There's materials, and of course you see labor. For sales tax purposes, if it's not the physical material, it's going to be considered to be labor as far as sales tax. So you're going to be wondering, well, what is markup and overhead and delivery and per diem and delivery? And basically, I've had people ask me that all the time, and I just try to turn it back on them and say, well, is it the physical materials? No. Well, then it's going to be follow the taxability of the labor. That's what I'm saying here. So if it's not the physical materials, consider it to be labor, and it's just going to follow the taxability of the labor. It's going to be whatever the labor is, whatever the taxability of the labor is, everything else is going to be that taxability. If it's not the materials, it's labor. So heaven forbid you're audited. They're going to know what your contract price is. So whatever you're charging, you're going to have all of your receipts for your tax paid materials, which most of the time you're going to be paying tax on materials, which we're going to go over here. Whatever's left, that's labor, and that's most of the time. So if you can see, that doesn't even take algebra, so thank goodness. To go into taxes, you can't be any good at math. If I was any worse at math, I'd do federal taxes. So I'm sorry, I got nothing but bad jokes there. But $9,000 contract, $6,000 tax paid materials, whatever's left, that's the labor, $3,000. So I'm going to go over the materials, then I'm going to go over the labor, then I'm going to bunch them together, and then we'll go over, well, what, can you ever get this without tax and that type of thing. And so if you have questions, let me know. I'm not sure what kind of contractors we have. I'm not sure if there's concrete or electricians or plumbers, or if someone is manufacturers, or if someone's does rock or hauling or landscapers. So you might let me know so I can concentrate if you, because certain contractors have just a little bit of different rules, have extra rules, and some have something that maybe doesn't apply to them. So I need to make sure and let them know. So if you guys want to just tell me what kind of contractor you are, you don't have to tell me who you are, but you can tell me what kind of contractor. When I do a live class, I usually go around the room just ask you what kind of contractor you are, just so I can basically tailor the class to who I have with me, so I can make sure and get all the information you need, because I want to make sure you get the most out of the class and get you what you need. So if everybody's there, don't mind just type in what kind of contractor you are. If you're an electrician or a plumber, or maybe you're a tax practitioner and you do books for all these guys, that's fine too. General contractor, all right. All right, general contractor. So you hire a lot of different subcontractors. I'm glad you told me that, so I'll make sure and tell you what the tax base is, because I get a lot of general contractors that will tell their subcontractors to not tax them. And I'll tell you, I'll go over that here in just a little bit. So does anyone else? I guess I scared everybody else. All right, well, let me just go on here. Well, contractors, if I told you the end user, contractors are the end user of the materials. So a contractor owes the sales tax on the materials when they purchase it. A contractor's customer should never see sales tax on materials because a contractor's customer doesn't owe the sales tax on the materials. A contractor owes the sales tax on materials because the law says the construction contractor is the end user of the materials. So when they buy the materials, they owe the sales tax, just like they're buying it for themselves. So as a contractor, you should never see sales tax on materials. As a customer, a contractor's customer should never see sales tax on materials. Now, that's usually where contractors say, well, I'm not the end user. And say, I know you don't feel like it, but the law says you are, and here's why. There's no sales tax on real property in Kansas, on real estate. If you go buy a house, you buy land, there's no sales tax when you buy that. There's property tax, but there's no sales tax. So when you install or apply tangible personal property into real estate, you turn that tangible personal property into real estate. Well, that also becomes the last time that tangible personal property was purchased in the format of tangible personal property. So you're actually meeting the definition of being the end user of that tangible personal property. You were the last person to buy that tangible personal property in the format of tangible personal property, meeting the definition of the end user. So, because you're turning it into real estate the second you install it into the real estate. So a contractor has to pay sales tax on the materials. Now, I'll tell you how you get that back, but your customer should never see sales tax on materials. Remember, we're just talking materials. We're not talking labor. We're talking materials. Now, there is a designation as a retailer contractor. You might contract a retailer, either way. And basically, that is designed for a business that's primarily a retail business. So you think of a big box store. You think of like Home Depot or Lowe's or Menards or something like this. You go in there, most of the time people are in there shopping around and they're buying stuff, they're taking it home. They're not having somebody install it. It's a do-it-yourself place. So most of the time people go in there and buy whatever it is and they take it home. That's a retail sell. So that business, they buy everything without sales tax, just like any other retail business. However, there are times in that retail business, they do offer installation. So when they do that, they're actually acting as a contractor. So sometimes you'll see they have things like water heaters or carpet or different things. Well, they're installing or applying this thing into real property. Well, they're acting as a contractor. Well, they bought all this stuff without sales tax. So are they getting out of the laws that say, well, a contractor owes a sales tax? They're not getting out of this. They still owe it. So they bought all this stuff without sales tax. But when they act as a contractor, when they install it, they owe the sales tax. So what happens is they have to pay the sales tax. They do this on their sales tax return on a line called merchandise consumed. So they owe sales tax on what they paid for it. Just like when you go buy it, you owe sales tax on what you paid for it. Same pay with them. So they owe sales tax what they paid for it, and they report it on the line merchandise consumed. So they don't get out of paying the sales tax. They just basically take the scenic route and do it on the sales tax return. So they're still paying sales tax on materials. So a lot of people say, well, I want to do it that way. You really don't, because it's not convenient. Your books are more complicated. Then you got to separate out. It's way easier to pay sales tax on your materials right up front. Now you have that, because when you do your sales tax return, you'll deduct those out because you were going to report them in your gross sales, of course, but you'll just deduct them out on other allowable deductions. That's a lot easier than merchandise consumed. So it's just a lot easier. So either way, contractor or contractor retailer, you owe sales tax on materials. I'm showing you right here where in the regulation it says right there, each contractor, subcontractor, repairman is deemed to be the final user or consumer of materials. used by the contractor, subcontractor, repairman. In construction projects, each contractor, subcontractor, repairman shall not give, and each retailer shall not accept a resale exemption certificate to purchase materials without sales tax. So right there it says your end user materials as a contractor. 92-1966, that's the regulation. Okay, well, what rate of tax do you pay on these materials? Well, Kansas is destination sourcing. So destination sourcing says that you pay the sales tax. The sales tax is owed at the combined state and local sales tax rate that's in effect where the end user takes delivery. Okay, so that may not necessarily be where you pay for it, but it could be. Now, my question is, who's the end user of the materials? Well, I just told you that, the contractor, right? Here's what I'm trying to make a point. The materials and the labor may not have the exact same sales tax rate. Just they're not necessarily the same. They could be. If you take deliveries of the materials at the site where the job's happening, then they're the same rate. If you're picking up your materials somewhere or taking delivery of them somewhere other than the work site, it could be that your materials have a different sales tax rate than the labor. So that's what I'm trying to tell you. Now, guys in Wichita, I've talked to quite a few of you guys in Wichita, and especially guys who have come to my class before, and a lot of the guys have used this to their advantage because Wichita has one of the lower sales tax rate in the state, 7.5%. And so a lot of the contractors will either pick up their materials in Wichita or have a shop in Wichita, so they'll have them delivered to their shop. So they'll pay 7.5% on the materials. Well, and if they have a job outside of Wichita, the sales tax rate typically could be higher. So it saves them a lot of money to, have it delivered or pick up in Wichita. So, there's nothing illegal about that at all. It's just that destination sourcing. So it's the combined state and local sales tax in effect where the end user takes delivery. That's what destination sourcing is. If you need to find what the sales tax rate is, it's on the Department of Revenue website. On the very front page, on the bottom, you'll see the lookup portion there. You want to look it up by the total address, and if you can get the zip code with the +4, you get the most accurate, and that's what you're going to want to use. Compensating use tax. Well, as a contractor, since you're the end user materials, you may owe consumers compensating use tax on materials. So if you go to another state and get your materials and you pick them up in that other state, you may owe, maybe you pay their sales tax. Maybe their rate of sales tax is less than Kansas sales tax. So if you're up in this area and you go to Nebraska and buy materials and you come back to Topeka, if their rate, let's say, is 8% and ours is 9%, you owe the difference of 1%, consumers compensating use tax. Now, if it was reversed and their rate was 9% and ours was 8%, would you get a refund? No, because you rightfully paid theirs, and no jurisdiction will ever refund an overpayment of another jurisdiction's tax. So you just keep your receipts to show that you paid enough sales tax. But compensating use tax for your materials, if you go outside of the state, if you didn't pay any sales tax, you'd owe, the combined rate of sales tax. Compensating use tax is the exact same rate as sales tax, dollar for dollar. There's no threshold in which it kicks in. It's been around since 1937, so it's nothing new. Unfortunately, this is a tax that a lot of businesses do not learn until they're audited. So that's the worst time to learn about it. But this would be on anything you're considered to be the end user of. So this could be on your materials, on your tools, equipment, that type of thing. So if you're buying something outside of the state that you use, store, or consume inside of the state, you haven't paid any tax on it, or an amount equal to or greater than the combined state and local tax inside of Kansas, you would owe consumers compensating use tax. If you're not doing that, then you don't have to register for this because it's a different tax. So it would, if you have a sales tax number, it's going to start with 004. It's going to have your EIN, your employer identification number. It'll have an F, and then it'll have a dash, more than likely a 01, because that's how many locations you have. If you have a consumer's compensating use tax, it'll be identical to that, except it'll start with 006 instead of 004. Nexus. Well, nexus means a presence in a state, and if you have a presence in another state, you're required to register, collect, and remit that state's sales tax. So if you go to another state, you're going to be required to follow their laws and likely need to collect their sales tax. Now, if that's the case, if you buy your materials in Kansas, you're still going to have to pay Kansas sales tax, even though the job's in another state, simply because you're the end user of the materials. So if you're purchasing them here, you're picking them up here, you owe Kansas sales tax. Question I get all the time is, well, I have a project exemption certificate from another state. That's in another state. That's not a Kansas project exemption certificate. So that project exemption certificate's no good in Kansas. So if you're going to want to get that without sales tax, you probably need to go to that state and buy your materials, because it's no good in Kansas. You'll be charged sales tax in Kansas. Okay, so I browbeat you about sales tax on the materials. Any questions on that? Most of the time, you're going to pay either sales tax or use tax on the materials. Just no way around that. There's not too many scenarios where you don't pay tax on materials. Okay, labor. So I'm talking about the labor. You're still paying tax on materials, but the general rule is you collect tax on the labor to install them. Okay, that's the general rule. So I'll tell you the general rule. I'll tell you the exception to this general law, the exceptions to the law, and the exception to the exception. So you pay sales tax on materials, then you collect sales tax on the labor. Now, remember, the labor is you're installing or applying the tangible personal property into real estate. Sometimes you're not installing or applying. So there's no sales tax on this. This would be things like mowing lawns, raking leaves, testing, air duct cleaning, drain cleaning, excavation. There's no sales tax on these things. So if you're doing just these things, there's no sales tax. So example, testing, I like to give the example I had out in an electrician in Garden City. He got a call from a baker that they had a receptacle, an outlet go out in their bakery. And so they called him and he said, well, it's an $80 trip charge for me to show up. So he went out there and he went down in the basement, checked the panel, checked the breaker, checked the wiring, then went up and checked the receptacle. Basically what he found out is the person, she'd plugged about 15 things into this receptacle and overloaded the circuit. And everything was fine. He just said, you can't plug that many things in. That's drawing too much. And so there was no sales tax on that because all he did was test it, and all he did was had to tell her, don't plug too many things in. So it was $80, no sales tax. He said it was a good gig because it was around Christmas time. She even gave him cookies. So $80, no sales tax, and cookies. Great, good gig. No problem. Okay, something I want you to be aware of is something called gross receipts. And you'll hear this a lot from people from Department of Revenue. The total amount of gross receipts. If you noticed, I said if you're doing this only and you're not doing anything else. Okay. If you're doing this with something else, well, now it can be different. So let's say he tested that same scenario. He tested that outlet, and the outlet was bad. And so he buys these outlets for, $2, $3, whatever. He buys them in gross. So he replaces that outlet. Well, gross receipts says that that's the tax, but you need to collect the amount on the gross receipts, which means the selling price, which means any consideration. Okay, this would mean anything, delivery, per diem, markup, overhead, anything. So yeah, that would be the testing charge too. You can't break that out and separately state that. So now he has to replace that. He has to repair it. The testing caused him to find out that that outlet now is bad. So now he has to replace that outlet. So now the whole thing becomes taxable, not just the outlet, but the whole thing. So he marks up the outlet to, $10 or something, and so the whole job is like $90. So now he's going to have sales tax on like $90 instead of before when it was just testing, it was $80, no sales tax. Or instead of breaking it out and having, oh, well, it's only sales tax on the outlet, but no, the whole thing, because he paid sales tax on the materials, on the receptacle. So that gross receipts becomes a big deal. So it's not just the outlet, but the whole thing, that gross receipts. That's very important. Okay, and that would be true like for drain cleaning. When they're getting the drain out, well, if they had to put a wax ring on a toilet or install or apply some kind of part somewhere. Because normally just drain cleaning, getting a clog out, that's not taxable unless they're installing or applying something. Okay, that's the general rule. Now, I'm going to give you the exception to this now. So what I'll need from you is just a separate drawer of your brain, and on the front of the drawer of your brain, this one drawer can't let anything else fall in it. You're just going to label it excavation, only excavation. Excavation's different. Excavation is exempt. You dig a hole in the ground, fill it in with dirt, that's not taxable. Doesn't matter what kind of job. Excavation includes things like trenching and digging and things like that, grading. You can separately state excavation. It doesn't, you don't have to include it in gross receipts so long as you separately state it. It's not like the other things, so it's different. So if you're hired at this commercial job and they have you do this excavation job, you dig this trench, no sales tax. Then they have you get this gravel, tangible personal property, install it in there, that's taxable. Then they have you backfill it in with the dirt you dug out, that's exempt, that's part of the excavation. Well, so long as you separately state the excavation, that excavation part won't be taxable. You can either separately state it or separately invoice it. Now that one's exempt because that one had it won an appeal. It was a court case, so it can either be legislation or there can be a court case that caused it to be exempt. So that's why that one is, and the rest are not. So just keep that one in mind. So excavation. Okay, that's the general rule of law right there. Now there's some exceptions to the labor. So still paying tax on materials. There's no sales tax on the labor though if the job is considered to be residential. So still paying tax on materials, no sales tax on the labor if it's residential. So residential is defined in statute as a place where people customarily live. So do people customarily live in houses? Yes, they do. No sales tax. But nobody lives there. Doesn't matter. People customarily live there. So no sales tax on that. Do people customarily live in apartments? Yes, they do. Doesn't matter if it's owned by a corporation. Now, with that one, it would be the individual apartments. The common areas would not be considered residential. So generally, those would be taxable. So if you're doing something completely in the individual apartments or the living areas in the apartments, that's going to be residential. If you're doing a mixture, you'd have to come up with either square footage or, this, I don't know, it could, depending on your business and how you build, could be this amount of time here, this amount of time here, however you build. Mobile homes, so long as it's hardwired and hard plumbed, then it would be considered residential. So what I'm saying is like a fifth wheel would not. That's tangible personal property, that's taxable. Nursing home, a traditional nursing home. The only part that's residential are their individual sleeping rooms, and if there's a bathroom in there, but the rest is not. So the nurse's station, dining area, everything else is not residential. So if you do something like a roof, you'd have to come up with the square footage of residential compared to commercial, and that's how you tax it accordingly, this percentage. Hotels are not residential, they're considered transient. Okay, so residential, no sales tax on labor if it's residential. There's also no sales tax on the labor if the job is original construction only of a building or a facility, though. So original construction of a building or facility. So what's a building? Well, it's a structure that houses people and property, basically. What's a facility? Right out of statute, it says, well, that's a mill, plant, a refinery, oil, gas, and water wells, and feedlots. Then only the distribution lines for rural electric co-ops and the electric for municipalities. So that'd be like a city-owned electric. The rest of the distribution lines, no. So those are very specific in statute. So that's a facility. So original construction of a building or facility only. So this has 5 definitions, by the way. So I'm not sure if anybody does concrete or asphalt work, because I'll give you the 5th definition first, because that means public highways or bridge work. So if you're working on that, that's going to be considered original construction. You pay tax on the materials, no tax on the labor. Most of the time, there's a project exemption certificate or something like that that would exempt that. So most of the time, that's why people don't know that one. That's the 5th definition. I'll give you the first one. Most contractors know the first definition, which means the first or initial construction of a building or facility. So in the sales and use tax for contractors, subcontractor, repairmen, starts on page 6. The first or initial construction of a building or facility, first time it's built. Pay tax on materials, no tax on the labor. Also, if it's tore down completely and built back up, that's going to be original construction. If it's tore down and there's just foundation and built back up, we'll consider that original construction. But if there's any walls standing, then that's not going to be original construction. That's just gutted. Second definition would be the addition of an entire room or floor to an existing commercial building. Now, the reason why we say commercial, because if it was residential, it would already be exempt as residential for labor. So the key to this one is you need to be adding usable square footage. So key to that one is square footage. So I'd write down square footage. So I could hire a contractor to come into this room and put a wall right here. And that's, construction, yeah. But it's not, he's not adding any square footage. He's just dividing this space into 2. But you knock out this wall to the outside. Now they're going to add square footage. Well, now that's going to be original construction. So that's the key, is to adding square footage. The third definition is kind of it's kind of interesting, and it's the weird one. It says the completion of any unfinished portion of an existing commercial building. So what this is, in order to qualify, there's 4 criteria that are listed here. It says the work was called for in the original blueprints or building plans. Completion of the unfinished portion is within a reasonable requisite of time from the original construction. The owner or occupant of the first or initial owner or is the first or initial owner or occupant of this building or facility. And the work would have been performed at the time of the original construction except for circumstances beyond the owner's control. So if you think about like a little strip mall, brand new little strip mall, and they have all these spots leased out except for one. It's just like this little generic white box waiting for a business to move in there. So the owner's waiting he's got it advertised out, to lease it out to a business. And finally they get this business to lease it out. And so they hire you to change it, to make it look like whatever it is it's supposed to be. Well, let's say it took a year. That'd be reasonable in that circumstance. Sometimes it's only like a couple of weeks, sometimes it's a month. So it's going to be based on the circumstance. But so with that one, what you do is you just go down the list, okay? Work was called for in the original blueprints. Well, it was always planned that there would be a business moving in there. So yeah, you could check that one off. The completion is within a reasonable requisite of time. In that scenario, a year is acceptable. I don't think you should go more than 3 because statute of limitations 3. Definitely not more than 3. The completion, let me see, the owner or occupant is the first or initial owner or occupant of that space. And since he's leasing these out, it'd be the occupant. So they are the first or initial occupant of that space. So you can check that off. And then the work would have been performed at the time of the original construction, except for circumstances beyond the owner's control. He'd have gladly had that work done, but he didn't have it leased out, so it was beyond his control. So you can check that off. So what I'm telling you is that's no tax on the labor. And you can definitely use that to your advantage because most contractors do not know that this is considered original construction and no tax on the labor. So if you have a competitor, chances are they're not going to know that, and they're going to likely be charging sales tax on the whole thing. And if you know this, well, this is one of those deals where you can charge less and make more. So it's kind of neat. You can, if the sales tax was 8%, you could charge 4% less and make 4% more, just splitting the difference of the sales tax. So that's just kind of interesting. Just because you know that they're going to be charging sales tax. And you know that you don't have to because it's original construction. It qualifies. Same way with this next definition, a lot of contractors don't know that it exists. Next definition says, well, if someone hires you to do this repair on this commercial building, and the reason for the repair is because the damage was due to fire, flood, tornado, lightning, explosion, ice loading, and attendant winds and windstorms, terrorism, or earthquake. That's it. Those are the only natural disasters. Not every natural disaster is in there. If you notice, hail is not in there. Hail, no. So that's how you remember that. Fire, flood, tornado, lightning, explosion, ice loading, attendant winds and windstorms, terrorism, and earthquakes. So what you're going to want to do is get some kind of document to prove this, though. Now, what can you get? Well, you can't take a picture of, if it was a fire, you can't take a picture because my nephew can make me look on fire right now. But if there's a picture in the newspaper, that'd be fine. You can get a fire report, police report, insurance document, something like that. All else fails, get an affidavit signed by the owner or the manager and have it notarized. So that'd be fine too. Just put that in your folder, in your records, and heaven forbid you're audited. And then I already told you the last one, that's bridge or highway work. So original construction is 5 definitions. So you're paying tax on materials, no tax on the labor if it's residential, and then I'm going to call all 5 of those definitions original construction. Well, when is the labor taxable then? Well, it's when the job is commercial remodel. Commercial remodel. So you know it's commercial if it's not a place where somebody customarily lives, and you know it's remodel if it's not original construction. So basically just reverse engineering residential and original construction of a building or facility. And by the way, that under that building or facility, under that original construction building or facility, that's very important. Let's say I did parking lots, and if we got a brand new McDonald's going up, that's original construction of a building. Pay tax on materials, no tax on the labor. And if I do parking lots, because I'm doing the parking lot and it's in conjunction with this original construction of a building, there'd be no tax on my labor, no problem. But let's say we have an existing McDonald's. It's not a brand new one, it's an existing McDonald's. And they're hiring me, they want me to do a brand new parking lot because they need a bigger parking lot. So they're having me do a brand new parking lot. That's not original construction because that's not a building or a facility. So it's the first scenario, it was in conjunction with a building. The second scenario, it's a standalone parking lot. See, there's a difference. So that building or facility is very important. Okay. Now, I browbeat you about the materials being taxable, but I mean, everybody knows you got to get your money back for the sales tax you paid on that, which means you're going to charge your customer more for the materials than you paid for it. That's marking them up. That's normal. That's being in business. So marking it up, is that part that you mark up, is that taxable? And just like I told you, everything else, the answer to most sales tax question is, it depends. And this depends. It depends on what kind of job it is. So, because if it's not materials, it's labor, and that's exactly what we're doing here. If the labor's not taxable, the markup's not taxable. If the labor is taxable, the markup is taxable. That's all I'm telling you right here with this. It's just saying it in a wordy way. The markup of materials on residential or original construction, the markup of materials is not taxable when the labor is not taxable, because the Kansas Department of Revenue considers markup of materials to be labor. Thus, if the labor is not taxable, the markup of materials is not taxable. And I go ahead and get really redundant and say the exact opposite on the bottom. So, now when you invoice your customer, the law gives two ways. It says, well, you can either itemize and show the sales tax to your customer, or if you have this language on your invoice to your customer, you don't have to show sales tax. Now, I showed the easiest possible way without showing anything else, just, all applicable sales tax included in one price. But really, I could show all these materials and all these different things I did, just not show sales tax. We recommend the second method, just invoice like you normally would, just not show sales tax and put that language on your invoice. We recommend that for contractors. Now, you don't want to do that second method, not showing sales tax and not have the language, because that basically would, whether you collect it or not, they would be assumed that you didn't collect it, and they would apply, if you were ever audited, they'd apply sales tax plus penalty and interest. So you don't want to do that. But we recommend the second method. You put that language on all your invoices. What that language means is, if it was taxable, I collect the appropriate amount. If it wasn't, I didn't. And basically what we would do is, this protects you, because a lot of times contractors get short paid all the time, because someone will say, well, don't tax me, I'm exempt, you're over. I'm supposed to buy that without tax. And more than likely, they don't know the laws, or they're doing it wrong. And you can't afford to pay tax that they owe. So you'll end up having to eat that, and that goes right into your profit, which you might have just lost all your profit right then. Okay. I'm not sure. We have a general contractor. I'll have a lot of general contractors tell me, well, I tell my subcontractors to not tax me because I'm taxing my customer, because it would be double taxation. And I tell them, well, if you're telling them that, you're doing it wrong, because that's not correct. Because although you hear, the title general contractor, and then you hear the title subcontractor, basically you're all contractors. because the general contractor is nothing more than the contractor's customer. So, and if that's the case, the subcontractor is going to pay tax on a taxable job. A subcontractor is going to pay tax on his material and collect tax on the labor to install it. Okay, so and here's why, and I'll show you why. In that contractor book, I think it's page 16. It talks about the tax base. No, it's page 18. I'm sorry. And basically, it says the sales tax base for construction contracts is the total amount of money received for the completion of a job or project, known as your gross receipts, less the cost of direct materials on which sales or use tax has been paid or accrued, and payments of subcontractors on which sales tax has been paid when applicable. So it means everything you charged your customer minus any tax paid materials or tax paid subcontractors, whatever's left, that's the part you collect sales tax on. That's what we're saying. So it's not double taxation. So here's how that would work. Let's say I'm a general contractor. So I'm hiring you. So I got this job. Remember, although I'm a general contractor, I'm really nothing more than your customer. So you're going to pay tax on your materials, and now you're going to collect sales tax on the labor from me. And as the general contractor, I'm going to go ahead and ask you to invoice me all applicable sales tax included, because if for some reason you do the sales tax incorrectly on your end, that's on you, because I now have an invoice that says I paid all applicable sales tax included. I'm not responsible for your failure, for your mistake, because if I didn't have that as a general contractor, I would be responsible. But now that I have this invoice that says all applicable sales tax included, I'm good. I'm good. Okay, so you paid tax and materials, you collected sales tax from me on the labor. Okay, now I didn't do anything other than hire you. I didn't buy any materials. Now I'm marking this job up just a little bit because I want to make some money on the deal, and I'm selling it to my customer. Well, out of everything I charge my customer, remember, I get to subtract out of it any tax paid materials, which I had none, or any tax paid subcontractors. Well, that would be you. I hired you. So I subtract out what I paid to you as far as what I charge sales tax on. So whatever's left, the only part I charge sales tax on is my markup, which again, I'm going to use all applicable sales tax included on my invoice so they don't see my markup. That's the only portion that has sales tax on it. So the total job, of course, is going to have the whole price on it, but only part I collect sales tax on is that markup piece for me, because I've already paid tax on that. So that's how that really works. A lot of general contractors just don't know that that's how it's supposed to work. Well, can you ever get any portion of this without sales tax? Yeah. You do work for a tax exempt entity. You could do just for tax exempt entity and they forget to get a project exemption certificate. If they get a project exemption certificate, that's great. I'm not sure if anybody here works for manufacturing companies. If they do, I can go over that, because that if you work directly on manufacturing equipment, there's that exemption, or warehousing equipment. And then I'm not sure if there's anybody here that works on public water supply on the equipment itself. And if the public water supplier pays the clean drinking water fee, they have their own exemption certificate. If anybody here does that, you can let me know. Most of the time, they would know that they're doing that, and they've seen it. They've come across it. They have an ST28EE, and it's like a project exemption certificate, and a lot of times they get one, but they just give you a form, and any work done on their public water supply equipment on the water supply is exempt because they're paying this clean drinking water fee. So if you're one of these, it's kind of a specialty. So if you're not working on the public water supply, this it's kind of a specialty plumbing type thing. Chances are, if you're not doing that, then you might not have ever heard of this. If you are, then you know all about this. I don't see anybody mentioning that, so that's all I'm going to say about that then. Same way with the manufacturing. If there's nobody working on manufacturing equipment, they have their own form, the integrated production machinery and equipment. Same thing with the warehousing. Could be a distribution center or grain storage. So, okay. Well, let's go over the tax exempt entities then real quick. Tax exempt entity would be something like a city, a county, a church, state of Kansas, sort of. They get issued a tax exempt entity certificate. So they first have to apply for it and be issued a tax exempt entity. So just because somebody's a nonprofit does not mean they're necessarily exempt from sales tax. They have to apply for this exemption. They have to be listed in statute 793606, either listed or qualify under one of the categories under that. And then if they are listed or qualify, then they have to apply for an exemption. If they apply and are approved, they get this exempt entity certificate. And the exempt entity certificate does have an expiration. So they all expire on the same date, and this one they will be expiring on October 1st, 2024. Now, most of the places that I'm talking about, universities, churches, cities, counties, they have their exemption is for direct purchases only, meaning the money must come directly from them in order for them to be exempt. So what that means is, for example, if this was for a church, and if I was a pastor of a church and I went to a hardware store and said, I'm buying a garden hose to fill up the baptismal of our church, and I said, hey, I'm the pastor, here's my debit card, church is paying me back, don't charge me tax. The hardware store would say, I'm sorry, pastor, I need to charge you tax because that money's coming from you, it's not coming from the church. I said, that's right, I gave you the wrong card, here's the church debit card. Well, now the church debit card's a direct purchase, so now that's exempt. Church check, or we have a direct billing account. So it just showed you how a tax exempt entity could be taxable. Only direct purchases are exempt. Well, how does this work for a contractor? Well, if this church hires you to build a kitchen in their basement, that's a real property project, real property improvement. Okay, if this is the certificate they give you, must be a direct purchase in order to be exempt. So you go buy your materials, not a direct purchase, so you need to pay tax on them. You do this work, and if it's just you doing the work and then they pay you for the labor, okay, that portion they pay you for the labor is a direct purchase. So that would exempt your labor if this is what they give you. Now, if you hire a subcontractor, the subcontractor goes and buys material, not a direct purchase, needs to pay sales tax on the materials. And then you pay him for the labor, not a direct purchase, so labor's taxable. So this is what you're given. The subcontractor does not exempt anything. So most of these exempt entities have, if you read on there, they have the ability to apply for and get what they call a project exemption certificate, a PEC. We call them that, PEC, project exemption certificate. So they just apply for this online, and it has a start date and an end date. So it's only good between those days. So for this short amount of time, they are exempt for indirect purchases for this start date and end date. It's not good before this date, and it's not good after this date. So if you buy your materials before the date on the PEC, they're taxable. If you buy your materials a date after the PEC, they're taxable. Because this is just this little window of time that indirect purchase. So when you get this PEC, you're able to use this and be like you are them and go buy your materials without tax, your labor without tax. You can hire the subcontractor and they can go buy their materials without tax, and they can their labor without tax. But Here's how this works, though. First of all, I would still take a copy of their exempt entity certificate, even though they don't like to give it, and they'll give you an argument. We've never done that. If they don't give it to you, okay. But you still need a copy of the project exemption certificate. Here's another thing they may not want to do, nor does it say they have to, but for record keeping, it does make it nice. If you can get one where they are the purchaser and you are the vendor, because you're selling this to them. You're selling this whole service to them. Okay, even though their name's here. So you have them do that, and they're signing it, and you have that, and then they give you a blank one. That's really how it should work. So they're giving you 2 copies. And then when you get that blank one, make sure you make lots of copies of that, because that's what you're going to use to buy your materials without tax. You're going to need more than 1 copy of that generally. Now, if you hire a subcontractor, you would give them 2 copies of this for sure, because you're going to be the purchaser and they will be the seller. So you'll make one just like that. Give that to them. And they'll need to put that in their records. And then you'll need to give them a blank one and tell them, go make copies of that, because that's how you're going to go buy your materials without sales tax. Because if they use it and don't have it, then they're going to have to come back to you and get another one. So, give them one, or you can make copies for them if you're nice. But make sure they have blank ones to go buy their materials without sales tax. But that's how that works. There's another project exemption certificate that's very similar to this. If you notice, these are nonprofit type. There's also a project exemption certificate that for-profit businesses works just like this. However, the starting point is with the Department of Commerce. We call them HPIP, High Performance Incentive Program. On the website, it's called the Enterprise Zone. Basically, it's like a big manufacturing company. Big companies like that, they have to be hiring a certain number of people. They have to qualify for the High Performance Incentive Program income tax credit in order to get the project exemption certificate. So it's a process. With the first exempt PEC that I was talking about, with the one for the nonprofits, they can never backdate them, and you cannot get a refund if you missed it. Okay. Well, with the Enterprise Zone project exemption certificate, you actually can get a refund because it's a longer process than this one. A lot of times you'll be starting on the job a third of the way in or so. So you've already purchased materials and you've had to pay tax on them because you didn't have a project exemption certificate. So there's actually a specific refund for that particular project exemption certificate that does not work on any other one. So just letting you know. Now, so you'll know you have one of those if it's you reckon, hey, that's a manufacturing company or it's a for-profit business of some kind. There's also another project exemption certificate, believe it or not. It's for farmers. Farmers, I say farmers, it could be a feedlot. So it's not like they're not growing crops. So basically, it's the kind of they're growing cattle. I believe cattle, chicken, might be in goats or something, hogs, something else. I forget, fowl. So chickens, and must be building a building, and the project must be more than $50,000. So they can apply for a project exemption certificate. So there's an agriculture project exemption certificate as well, and it goes along the same lines as the Enterprise Zone. But a project exemption certificate, it will exempt your materials and labor, and if you hire a subcontractor, it will exempt their materials and labor. There's also another type of exemption. Going back to this exempt entity certificate, it looks like this exempt entity certificate. I don't have a copy of that one. You may never run into it, but we call them by or on behalf of exempt entity certificates. And the reason we call them that is because on the exempt entity certificate itself, it'll say a contractor may use this certificate in lieu of a project exemption certificate, although it is recommended they get a project exemption certificate. Most of the entities do actually get the project exemption certificate, but you could actually use that exempt entity certificate as a project exemption certificate. says right on that exempt entity certificate. There's not too many entities out there that can do that, but just wanted you to know if you ever come across one, they do exist. Kind of few and far between. I think it's like rural volunteer fire departments, domestic violence shelters, something like that. Domestic violence shelters, Frontenac Education, Goodwill Industries, Easter Seals, ground and rural water districts, homeless shelters, Kansas Academy of Science, Korean War Memorial, Marilock Center, rural volunteer fire departments, Victory in the Valley, and Wayside Waves. And like I said, you may never come across one of those. But again, that would exempt your materials and labor. I'm not sure if any of you work on appliances like refrigerators and washers and dryers and stoves, microwave ovens, things like that. If you're working on things like that, that is not considered construction contractor work. That's considered working on tangible personal property. Now, a lot of people always ask me, what about a water heater? Water heater is considered working on real estate because it's permanently affixed, it's permanently plumbed in, that type of thing. Whereas like a freestanding stove and even though it might have a gas line, it's still considered an appliance and a piece of tangible personal property. So if you're working on one of those appliances, then it doesn't have a designation for residence or original construction. You just collect sales tax on the whole price on the gross receipts. There is no designation for labor or materials or anything like that. Even though you might charge like that parts and labor, you'd still collect tax on the whole thing. Same way with like automobiles, even though they have parts and labor, they collect tax on everything. The labor's tax, there's labor and parts are taxable, the whole thing, gross receipts. Okay, tools and equipment for contractors. When you buy tools, things that allow you to do what it is you do, you owe sales tax on that. Now, if you were to ever buy a tool like at a garage sale, well, that's fine. You just get a receipt because you don't owe tax on that. But if you go buy tools, buy a new cordless drill or saw or something like that, you pay sales tax on that. You don't get an exemption for that or anything like that. Now, when you do your federal return, maybe there's some kind of deduction there, depending on how much it costs and if there's any depreciation. It have to be something fairly big. But for sales tax purposes, you owe sales tax on that because you're considered the end user of those. Now, with sales tax and the sales tax law, with purchase or rental or lease is taxable because renting and leasing is the same thing as purchasing as far as taxability. So as a contractor, if you rent or lease a tool, you would owe sales tax on that since you're the end user of those things. So if you go rent a tool or piece of equipment, that's taxable as well. Now, if you have a project exemption certificate and you rent a piece of equipment, you're able to rent that without sales tax. But the limitation on that is that piece of equipment can only be used on that particular job, cannot be used on any other job, it cannot be purchased. But with that said, it can be rented without sales tax on that particular job. Now, anything else, if you rent a piece of equipment and it comes with an operator, well, now you're not really renting a tool anymore. You're not renting really anything. You are actually hiring a service. You're paying for a service. It's like a contractor, subcontractor. So now you got to look at, well, is what you're hiring, is that a taxable service? And then, well, is the labor taxable? That type of thing. So you got to look at it differently than if it doesn't, because if it doesn't come with an operator, you're just rent or leasing a piece of tangible personal property. That's taxable. Doesn't matter what kind of job it is. But if it comes with an operator, now it's basically a subcontractor. So, for example, maybe what it is you rent, maybe the service they provide, if it comes with an operator, maybe that's just not a taxable service. the example of that is, let's say we rent a crane to hoist an HVAC thing onto a roof. Well, moving this thing from here to here, that is not a taxable service. It doesn't matter what kind of job it is. So long as that's all they do, they're not part of the crew that helps hook things up, then it's not taxable. If they are part of the crew that gets out and hooks things up, well, now gross receipts says that's taxable. Then we got to look at the labor. Was the labor taxable? Maybe it's original construction. If it's original construction, well, now we're back to not taxable again, right? The labor. So, okay. But so you got multiple factors to look at if it comes with an operator. So look at it as a subcontractor. Okay, so what I've said is you pay sales tax on materials. You collect sales tax on the labor if the job's a commercial remodel. And get an exemption certificate for a project exemption certificate. If you public water supply, get the ST28EE. Manufacturing, you get the ST201, which is the integrated production machinery equipment, or the ST203, which is the manufacturing exemption certificate. On page 16, we have the decision matrix. It's basically just a flow chart. It doesn't cover every scenario out there, but basically this is just trying to jog your memory and help you remind you, are there any portions I can possibly get without sales tax? So the first one's going to be the public water supplier. So if you don't do that, you can mark no on that one right away. But if you mark no to all of these questions, then you're going to pay tax on materials and collect tax on the labor. So the second one is, well, do they have a project exemption certificate? If you answer yes, well, you're done, because I can buy my materials without tax and no tax on the labor. And if you mark no, well, okay. Then I need to see, well, is it possibly one of those buyer on behalf of exempt entities? So look, if you mark no, then it's going to be, well, do I have an exempt entity certificate? At least that, and if they forgot to get a PEC, if I have that, that'll at least exempt my labor. If it's no, well, okay, then it's going to go over the exemptions for the labor. Is it residential? Is it original construction? All 5 definitions. And by the way, there's no exemption certificate for residential or original construction. So basically what you get for proof of that is an address for residential, and then, like I said, either an affidavit or like for original construction, a copy of the building plans or work orders and things like that. Put that in your records. And then know if it's manufacturing, get the ST203 or 201. If it's not, you pay tax on materials, collect tax on the labor. Okay, got a lot of information in a short amount of time. What questions do we have? Anybody have a question out there? Well, if you don't think of a question now, if you do later, that's my contact information, my direct phone number and my direct email. Feel free to contact me. I'm the only one doing these right now, and so if I'm doing this, of course, I can't answer email or phone, but I will do my best to get back with you, and it doesn't bother me. I can get you a good answer. So don't be afraid to contact me, and I won't turn you in for an audit or anything like that. And, we'll be happy to get you a good answer. And if you have somebody giving you a hard time about sales tax, just have them contact me, and I'd be happy to talk to them. And I won't chew them out or anything like that. But I just tell them what the laws are. I don't want you to lose any customers because this is what the laws are, and it's not your fault. You know, that way they can blame it on me and not you. So that's all I have today. If you do have questions, just let me know. And thank you for attending.